Hello, friends. Welcome back to Stylist Soul Tribe Conversations. I am joined today by Michelle Cook. Michelle is a beauty school graduate turned licensed CPA. As the founder of Carter Cook CPAs, she and her team specialize in guiding beauty professionals to move beyond compliance and into forward-focused strategy. I love the way that you worded that specifically. I was reading through your bio and I love the way you worded that, so we'll get back to that. Michelle also empowers beauty professionals to be the financial experts in their business through her course, Beauty Bookkeeping. When she's not helping her clients maximize profit, you will find her snuggling her 3 kiddos and drinking lavender tea. Love, love, love. I really, like I said, love what you said about move beyond compliance and into forward-focused strategy. Michelle and I have had mutual connections for years. I feel like we've known who each other has been for years, but we just got to connect last month at the Thrivers X Club retreat. We got to sit at the same table for the whole entire event, so we really got to connect a little bit deeper, and I was like, I would love to have you on the podcast. And I think what you're doing is so special and so important because we had this conversation a lot at the retreat, but I think moving from compliance, which I think is so typical for, I would assume, CPAs across the board, obviously I'm just familiar with our industry, into forward focused strategy. So tell me a little bit more about like what that means in your own words and a little bit of your story. And then we have some fun topics that we're going to dive into and talk about today.
Yeah, absolutely. So I think when any new business starts,
Yeah,
compliance is the where you go to. It's like, how do I file my taxes? How do I
totally.
get my bookkeeping done? What are all the things that I need to do?
Mm-hmm.
But then once you get a little bit further into business, you start to realize there's a lot of things that aren't necessarily that the government's going to make you do,
Mm-hmm.
but are still so important for your
Totally.
business.
Yeah.
And so you start, instead of saying like, oh, what happened, which is like looking at your profit and loss statement, which is
Mm-hmm.
still an important activity. I don't
Yep.
want to downgrade how important it is to like know your numbers, but then you start thinking, but how can I make that profit and loss statement look different in the
Totally.
future?
Totally.
And that's what that comes down to.
Yeah. So when did you said beauty school graduate. So when did you go to cosmetology school? When did you transition into um becoming a certified CPA? And then you told me a little bit about your story and the partnership. We don't have to get into all of that, but when did you decide to bring this outlook into our industry in this way? Because I agree, compliance I think is, I'm assuming, like, I'm thinking my dad owns like a heating and air conditioning company. So I'm assuming other industries, when you meet with a CPA, that's very much the focus. But I've talked with so many people about you when you're not in the room. I think you are the only person that is really coming from that place and space. And I used to get frustrated when I would speak with my CPA in the past because I would want them to help me grow my business. But then I had a realization of like, oh, Lisa, that's your CPA. That's not like your business coach. Like, that's not. So I think what you are bringing to this industry is so unique and different. And so I want to just kind of unpack that a little bit more.
Yeah, for sure. I think there is something about being a brand new small business and how kind of the first outside professional you hire is often a CPA because you've got to file that first tax
Totally.
return
Just to
or
follow the
something.
rules. Yeah.
Yeah, and so it is so interesting to me because we often do get treated like a business consultant. And
Sometimes, yeah.
yeah, and I guess we've just kind of leaned into that versus most accountants want to like set a boundary and say, well,
Totally.
actually, like this is my area of focus, which, if that's what they want their area of focus to be, you
Totally.
negotiate on that. But, within the, financial realm at least, we're never going to
Yeah.
give legal advice or things
Of
that
course.
we're not qualified to do. But I just think the forward looking part is the fun part. Like that's
Totally.
that's where I'm like excited and that's what I get
Yeah.
lit up about. But yeah, as far as my story goes, I went to beauty school when I was in high school. So
Okay.
there was this cosmetology program that you could do your senior year. It was like $500 for the kit, and
Awesome.
then the school was paid for through high
Incredible.
school. Yeah, so insane because yeah, $500 to go to
I did
beauty.
something similar. I think mine was a few $1,000s. I believe that my high school paid for like 50% of the cosmetology tuition, and then my parents paid for the remaining. So incredible opportunities nonetheless, but I've never heard of one quite that good. That is incredible.
Yeah.
Yeah.
Yeah, it was amazing. So I did that. I graduated. Maybe it was a little bit of a you get what you pay for situation.
To-
But certainly the school that I went to kind of left you up to yourself at the end,
Yeah, I think that's pretty common for cosmetology school. Some worse than others, but yes.
Yeah, so I got out. I didn't know that you could be an employee
Oh,
somewhere, like a
wow.
beautician salon. Like I just thought you had to go booth rent
Wow.
somewhere.
So that's all you'd ever seen. Yeah.
That's all I'd ever seen. I lived in
Hmm.
the San Francisco Bay Area and I was just flabbergasted at the thought of I'm going to have how much in booth rent? I don't have a
Totally.
single client.
I have to
And
pay
oh yeah,
taxes.
and by the way, I just graduated, so I'm not any good either.
Totally. Totally.
So yeah, I kind of look back on that time and I think if I had had the same circumstances, but lived in today's day and age where
Yeah,
information is just so readily available, I
totally.
probably could have figured my way through it.
Yeah,
But I just looked at it and it was an insurmountable, I don't know how I could get this
totally.
done. So then I was like, well, why don't I go to college
Yeah.
and learn a few things? 'Cause I'm
Hmm.
still 18 years old and maybe once I learn some more things, I can like open up a salon when I graduate. So that was
Love.
the initial plan. But then I was taking all these business classes, and then as part of that, you have to take accounting courses. And
Hmm.
then I just ended up finding out that like everyone else hated these classes, and I was
Yeah.
actually really good at these classes. So I just moved my area of focus and then I started working in accounting and
Love.
then did that for like many years, working at a CPA firm. And then I went
Yep.
out on my own and then specialized in the beauty industry
When
and
did you realize that you wanted to specialize in the beauty industry? Obviously, having that cosmetology school experience, I'm sure that played a piece of it, but how did you like make that decision to go all in? What did that moment look like?
for sure. It was actually very early in the
Okay.
process because what happened was I was just, open for any business.
Yep.
And then you find out really quick that there's all these nuances with every
Totally.
industry. And then I ended up stumbling into working with a beauty company and I was just like, oh my gosh, like
Yeah.
all of this just makes sense to me,
Yeah.
right? And it's because of the beauty school
And also, you were
experience that I
probably
had.
clearly kind of interested in it. That's why you went to cosmetology school and to begin with. So I love that.
Yeah, and it was just like I could like walk in it. It's like I understood how the business models
Hmm.
worked, like, and I just kind of understood where people were coming from and
Yeah.
having like, not had any financial education in beauty
Totally.
school. You come in now, you are an owner, and
Of a
there's just
business. Yeah.
a massive crater. It feels like that you've got to
Totally.
cross over to get to the other side. So
Yeah.
I think I just have a lot of empathy for everyone in that situation.
Totally. Well, I love that you went all in on that. That is so incredible. And I didn't realize that that's kind of how that path took place. So I'm glad that I got to spend a little bit more time learning that story. You put some really cool topics, and I'm hoping we get the chance to get into all of them. We may have to do a part two. We'll see. You put the FICA tip credit and tip deduction. While I kind of know what this is, I truly have no idea what this is, which is terrible. So tell us what this even means and let's like break this down. And then I will be the completely naive person asking all the follow up questions so that the listeners who also don't know what this is can learn as well.
Absolutely. Okay, so we had some major tax law overhauls last year,
Mm-hmm.
and there were two related to tips. So one is the FICA tip credit, and then the other one is the tip deduction.
Okay.
So let's just like keep those separate in our brain.
Mm-hmm.
The credit is one thing and the deduction is another. So
Okay.
let's start with the credit. In my opinion, the credit is the one that's the most impactful to the beauty industry as a whole because it's a
Okay.
permanent tax law change.
Mm-hmm.
The deduction is only for 4 years, but the credit is until the law gets
Unless
repealed.
someone changes it. Yeah.
Yeah. It's a big game changer for S Corp owners and employee-based salons.
Okay.
And how it's worked historically, and it's kind of like crazy that it's always worked this way historically, but it just was what it was, is
Mm-hmm.
when business owners had employees and they were paid tips,
Mm-hmm.
the business owners had to pay payroll taxes on the tips that their employees received, which is kind of nutty because as a salon owner, you have zero control over how much
Yeah.
someone tips your employee.
Mm-hmm.
You're not getting any of those funds. It's
Mm-hmm.
just a straight up expense.
You know what I
So,
would say I relate this to, and tell me if this is the same thing. I remember working at a restaurant before I even did hair, and it was a Texas Roadhouse I worked at for like 5 years, and there was tip share for the hostesses and the bartenders. And so like if somebody stiffed a table and didn't pay a table, they would still have to pay tip share based as if they got a tip. Is that kind of the same thing because the restaurant has to pay taxes on that, or no?
oh, that's so interesting. Okay, so
We don't have to
from
get too far off if that's not related. I'm just curious.
yeah, not precisely, but what I'll
Okay.
say is what's interesting is that the restaurant industry has always had this tax credit. Well, I mean, always for
Interesting.
like the last 30 years.
Okay,
So
so
that's
we were
why,
behind on that. Interesting.
yeah, everyone's just been saying like this is really unfair. You don't make restaurants do this.
Mm-hmm.
Meanwhile, restaurants don't pay waiters and waitresses a fair wage or even
No,
like minimum
no,
wage.
it's like way below. They're allowed to do that.
Yeah,
Yeah.
and they're allowed to use tips to make
Mm-hmm.
up that difference
Mm-hmm.
versus a beauty salon have always paid at least minimum wage, if not more,
Totally.
and then the
Totally.
tips have always been above and beyond
Yeah.
that. So, so even more unfair because it's like the salon owners are already paying a fair wage, and now on top of that, we have to pay
Wow.
payroll taxes on the tips.
Okay, interesting.
So basically, what's happened now is that is no more. So the taxes, how it works is you still file your payroll taxes, all the normal withholdings occur, but then at the end of the year, for any tips that were beyond, minimum wage,
Okay.
then you basically get a credit for all of the payroll taxes you've paid on
Wow.
tips. So, I mean, this is a big deal because even for, let's say you're an S corp, you don't
Mm-hmm.
have any employees other than yourself,
Mm-hmm.
but you're a high performance individual,
Mm-hmm.
you can easily have $25,000 in tips.
Totally.
The value of getting those tips on your W-2 is about $2,000.
Wow. Yeah, that's
It's just like
significant. Yeah.
$2,000 that you didn't have before.
Totally. Yeah.
And, when you have a much larger team, I'm seeing like
Mm-hmm.
five-figure
Yeah.
tax credits,
Wow.
and it's just totally changed the landscape of
Wow.
everything. There was always so much like shady stuff happening at
Totally.
salons related
Yeah.
to compensation and like doing 1099
Totally.
versus W-2,
Mm-hmm.
trying to, get your employees to not claim their tips because you didn't want to have to pay the payroll taxes on it.
Yep.
Like all this like stuff that we all know is happening.
Yeah.
And it's like this tax law kind of solved that issue. It's like
Love.
have to be pushing
Yeah.
1099. People really should be W-2s. We don't have to encourage people to commit tax fraud by not claiming
Yeah.
their tips. Like we don't have to encourage any of these behaviors
Yeah.
because credit's kind of taking care of that.
Wow, that's incredible. Now I'm over here thinking, I feel kind of dumb every time I talk to about these things. I start to feel dumb, but I remember that a lot of people feel that way. One, I'm hardly behind the chair anymore, so that's probably why that doesn't affect me as much. But then I'm also wondering, do you think that CPAs who don't specialize in the beauty industry are fully aware of this or potentially not?
Okay, so here's what I'll say is if you are a licensed CPA, you are required to get at least 40 hours a year of like continuing education.
Totally.
So if you're taking continuing education
As you should
updates,
be, yeah.
it for sure was like this new tax law was like all over
And it
all of
only affected the
stuff.
beauty industry.
That one did. So here's, I think, what the risk is. It's
Mm-hmm.
not maybe that the accountant like didn't hear about it,
Yeah,
but you did like a 16-hour update and it was like 10 minutes of that
totally.
16-hour update and you have like two salons and
Totally.
a business of 500 clients.
Yeah.
So it might not have been top of mind.
Yeah.
I have seen it happen where like new clients have come to us and we're seeing like, oh, hey, you didn't get like your tip deduction or you didn't
Yeah.
get your tip credit. The tip
Wow.
credit is the one that's like more likely to be missed.
Okay.
But anyway, so it is happening, but also this is where it's like be your own advocate and just
Totally.
remind your
Double check.
CPA.
This is a new thing. Is this something that we're taking advantage of? If
Yeah.
you found, if you went over somebody's tax return from the previous year and you looked at it, I guess it depends on the number, would you ever find that it would be worth going back and trying to amend that? Or typically what's done is done and just moving here forward?
It's all a numbers game. So the
Totally.
first line of defense I always tell people is go back to your prior accountant and see if they'd be willing to amend for free.
Mm-hmm.
Because in my opinion, something like
They
this where it's
technically
like,
missed that. Yeah.
yeah, I would expect that your CPA would have known that these tax laws
Mm-hmm.
occurred and that they should have been claiming it.
Mm-hmm.
I think any CPA who's like truly ethical and standing behind their work would say like, my bad, let me fix it.
Yep.
And like, okay, great. And so, you push it through. It, takes the IRS like 4 months to process amendments. So it's not
But
the
by the time you
accountant's
have to pay
fault.
taxes next year, it might affect you. Yeah.
Yeah. So that's always the first line of defense. Just see if they're willing to amend it for free. And I
Mm-hmm.
think most ethical practitioners would do that. But not every practitioner is ethical.
Yeah.
Not everyone's a CPA also. You have to
Yeah.
remember, like there's a lot of tax preparers who aren't required to be licensed. So
Yeah.
they might not have had to have taken that continuing professional
Totally.
education. Maybe they truly didn't know.
Yeah. Yeah.
So if they're not willing to stand behind it, then if we will amend for like a new client coming to us, we always do an analysis or say,
Okay.
okay, well, like, here's what it's going to cost us and our employees time to
Mm-hmm.
redo it. And, what are your tax savings? And let's
Mm-hmm.
kind of weigh that. And, if an amendment is going to cost $1,000 and it was $1,000 in taxes, well, then there's no point, right?
Yeah.
You're just going to be a wash. But
Yep.
if an amendment's $500 costing you, but you're going to get back 2,000, well, now you're net 1,500.
Totally.
Let's go
Worth,
do it.
yeah, worth doing. Totally. Okay, so that's mostly the tip credit you were just referring to, yes? Tell us
Correct.
about the tip deduction.
Okay, yeah. Tip deduction. So the reason why I said the credit was more powerful is because it's like forever.
Okay.
But the tip deduction is actually saving people more money in the interim.
Okay.
So it's through 2028. So we've got 4 tax years that it
Okay.
applies to. And it's a deduction of up to $25,000 in
Okay.
tips. So it's about a $5,000 tax savings on
Mm-hmm.
average if you have the full 25,000.
Okay.
So when you like put these two together,
Mm-hmm.
even as a solo artist without other employees, if you have that $25,000 tip level, you're looking at about a $7,000
Yeah, that's significant.
total tax difference,
Yeah.
and you didn't do anything different with your business. It's
Wild.
just the laws changed.
Yeah.
Yeah, it's significant.
Wow. Do you think there's any chance, obviously you can't predict the future, but based on just trends, and will that continue maybe after the 4 years, or you don't see that happening?
I could see it happening
Okay.
potentially. It actually does happen a lot in
Okay.
tax law where they kind of like try something, see how
Yeah.
it shakes out, and then
Well, that's my assumption is if they almost like took away, I know it was known that it was a 4 year thing, but if that's working really well for people and I don't know what all goes into that, stimulating the economy, whatever, you would think that maybe they would keep that around. Okay, interesting. So a couple things to just be on the lookout for. Mention that, to your tax preparer, is this something that we're taking advantage of? Because I know the laws have changed.
mm,
Love. Amazing. You also put top tax deductions. So these are like basically things in the industry that you see are the biggest, have the biggest impact when it comes to deductions. Yeah.
yes,
Let's
yes,
dig
yes.
in.
Okay, so I think normally speaking, they're like the obvious deductions, right?
Mm-hmm.
Like if you've got rent or insurance or back bar, you're buying retail product wholesale, yada, yada, yada.
Yeah.
Okay, so these are all the normal ones. We don't have to go over
Yeah.
all the stuff that
Yep.
everyone's already expensing. Um, okay, so then the next thing I'll say is people are like, how do I increase my deductions?
Mm-hmm.
So, deductions is just another word for a business expense.
Mm-hmm.
So, anytime you have a business expense, that's going to be a deduction.
Mm-hmm.
And it's a fine line,
Yeah.
I also want to say,
It's a very
because
fine line. Yeah.
we don't buy things just for the sake of a deduction. The math
Mm-hmm.
doesn't
Does
math
make
for
sense on
you.
that. Yeah.
Yeah. And yet, if there's like opportunities that come your way, maybe like upgrades or other things,
Mm-hmm.
that's when it gets a little more interesting because you're like, oh, well, I have this, I don't know, $2,000 laptop
Yep.
that, I'm going to use for social media marketing and all the whatever I'm doing with my business and has all these features. Well, if you're in a 25% tax bracket, you're looking at like the laptop actually ends up costing you like 1,500 bucks
Yeah.
because you're going
Yeah.
to write off the 2,000 and it's going to save
Totally.
you
Yeah.
500 in taxes. So anyway, so that's just kind of like laying the groundwork for like when deductions make sense.
Mm-hmm.
But In terms of deductions that can come to you that maybe aren't flowing through your bank account,
Yeah.
I think of things like home office. A
Yep.
lot of people are there's a lot of work that's done outside of the
I
salon.
mean, if you're coming on to Zoom calls, if you're coming to coaching, I mean, things like that, that's all happening.
100%.
Obviously, client communication is happening, you doing your own bookkeeping, marketing, all of those things. Yeah.
Yeah, yeah. There's a lot of admin type
Mm-hmm.
stuff that come along. So, yeah, home office is a good one. Now, the laws are that it needs to be exclusively used for business.
Mm-hmm.
So you can't take a common area like, I do all my work at my kitchen table. Now my
Totally.
kitchen's a deduction. So
Yeah.
it does need to be like a separate area that you're using. But anyways, that's a big one. And like I said, you got to add it in separately. It's not like
Mm-hmm.
expenses that are gonna
That is
flow.
one that I know that I do. And then we do some of my home internet as well, right? Yeah.
Absolutely. Yeah.
Mm-hmm.
So utilities, internet, electricity, water, like these are all things that a home office would need.
Yeah.
Mortgage interest if you own the home
Oh, I don't know
or
if I do all that. Who
rent.
knows?
Who knows,
Maybe. I'm
right?
not sure. Yeah.
So anyway, so yeah, that's a great one. Another good one is business use of your personal vehicle.
Mm.
So sometimes people are like, should I have my business buy the
Yeah.
vehicle? Should I buy it? How does that work? For salons specifically, like beauty industry, usually it makes the most sense for you to purchase it in your name and
Mm-hmm.
then you get reimbursed from the business for the
Mm-hmm.
business usage of it. And the reason for that is if you buy it in the business's name and then you ever use it for anything
It becomes
personal,
risky.
now
Yeah.
now you're supposed to like pay the business
Mm-hmm.
for the use of it and it's like income to the
Yeah.
business and income on your W-2.
Yeah.
It's messy. So anyway, so yeah, that's usually what I say is put it in your name, but then track all the times that you're driving for business. Now, I
Mm-hmm.
will say driving from your home to the salon is considered a commute, and the
Commute. Right.
IRS doesn't let you deduct a commute,
Yeah.
just like a W-2 employee doesn't get to deduct their commute to their
Yeah.
job. But anytime you're running errands, going to trade shows, getting
Mm-hmm.
education, all of the things, then those are miles that you can put
Do you have
into.
any tools that you really like for that? I know for a minute I had an app on my phone that I was using when I was driving, out of town to go to the supply shop. I don't use it anymore. But do you have any like tools that you like for that
Yeah, okay. So if you have QuickBooks Online, they actually have a little feature
feature?
within
Okay.
their app, and you can like it's like swipe left or swipe right, whether it's a
Yeah.
business or personal trip. I will say, because I actually had it for a while and I found it annoying because
Yeah.
most of my trips are personal, like very
Yeah.
few are actually
Same. Mm-hmm.
business. And so I was like, "Ugh, now I have to
Yeah.
like
Go
whatever.
backlog on it all. Yeah.
Yeah,
You're on
personal,
Tinder all
personal,
of a sudden.
personal.
Yeah.
So as simple as it sounds, my preference is to use just like my own little spreadsheet
If
for
you
my
know
stuff.
you're using it for business. Yeah.
I just so rarely have to drive for
Yeah.
business personally. And so that's when the app didn't make sense. But if you have like a higher frequency where you're
Mm-hmm.
driving for business, I think the apps are great. So yeah, like I said, QuickBooks Online has something built in. Mile IQ is another like reputable one
Okay.
that people like.
Cool. Love it. Any other top tax deductions that come to mind for you?
Yeah, I think another one that often doesn't get put in your bookkeeping to keep an eye out for is cell phone. If you're using
Mm-hmm.
your phone for both business and personal,
Mm-hmm.
not only when you buy the phone can you be splitting up some of that expense, but also just the monthly
Mm-hmm.
payment.
Yeah.
Um, and that's where you kind of have to make a judgment call of like, am I using this 50-50, 75-25?
Mm-hmm.
Like, what is it? But if you don't have a separate business phone, like making sure that you get that expense on the books
Yeah.
can really help.
Love. Love. I know in my community there's a couple girls, they just said it at the last retreat that they were at, and they were like, you got to keep doing this retreats because my CPA tells me that I need more write-off. So I would say that's another thing too. I do very all-inclusive retreats where the accommodations, the food, everything is included, and the way it shows up on their bank statement is just Stylist Soul Tribe, education. So I know a lot of people love that as a write-off. And again, you don't buy a ticket to that for the write-off because that doesn't make sense, but sure, certainly as an experience to learn something new, to rest and rejuvenate. It's kind of a unique way to do that I think is completely above board and great. I'm trying to think if there's anything else that I know of are huge write-offs for me as well. Honestly, mine has become, but you're like me now, it's tech, computers, cameras, things like that. Those are probably my big ones. But yeah, no, I think that's great. Go
I
ahead.
will say something about what you said for your retreat. So, what's really cool is that you're like lumping it all together. On their
Yeah.
side, it's just an education
Yep.
expense. However, if they had to like get their own hotel individually and like pay for all their meals individually, food actually is only like 50%
Yeah.
deductible. So they end up getting like a 100% deduction on something that had they paid for everything individually, some of it wouldn't have even been
Well, and
100.
that's what they told me because the last couple of years I've done all inclusive, and this year I am trying to like be accommodate more people, and so I lowered the ticket price and I'm not including them. They were kind of bummed about it. I was like, well, you know what? I'm sure if I talk with my event planner, there could be an add-on ticket that we could throw in because really it's all the same thing. And if that really significantly helps you with taxes, I'd love to be able to do that. So we're exploring that. And I know the retreat that you and I were just at had kind of a similar setup. So yeah, I think that's another one that people in my community are loving because it's almost like a little vacation for yourself once a year. It's like girl time, it's education time, it's rest and relaxation, it's education, all kind of lumped into one. So that's what I think of when I think of top deductions. Okay, we're still doing pretty good on time. All things S Corp, how they work, setting a salary, knowing when it's time. I'm trying to think. I think majority of people who are listening to my podcast probably do know what an S Corp is, when to do it, setting up a salary. I guess what are some things that you find, Michelle, are either common misconceptions or I feel like some people teeter on the cusp of that. And I feel like different CPAs have different opinions on when the time is right to make that switch. I'd love to hear your perspective on that.
Totally. So, generally speaking, I say start thinking about it when you have a $50,000 a year profit. And
Okay.
that's profit, not
Yeah,
revenue.
take home. Mm-hmm.
Yeah, take home. And here's the reasoning behind. When you become an S corporation, you must put yourself on salary as a W-2
Mm-hmm.
employee. How the math works out is if you take, your previous profit,
Mm-hmm.
subtract out whatever that salary is. If you have at least $20,000 left over,
Mm-hmm.
now it makes sense to have the S
Okay.
corporation. So why I say about 50 is because on average in the United States, that $30,000 salary is pretty normal-ish. But
Mm-hmm.
I say ish, right? Because
Totally.
it's not going to be okay in San Francisco. Like
Yes.
you have to be reasonable about where you
Well, they
live.
consider it a reasonable compensation. So
Yeah,
until your salary can be a number that reasonably makes sense for the sole owner of a single person business to make, it's when that number makes sense. Okay, cool. And then what would you say are the big things that change or people should know if they're feeling like they're on the cusp of that and the reasons basically, I guess, why you do it?
sure. The only reason to form an S corporation is to save on taxes. So
Mm-hmm.
some people are like, "Oh, I want to put myself, I'll make myself an S corp," but I'm like, "But don't only do it if it's actually saving you money in
Totally.
taxes." And I will also say, like, make sure your accountant does an analysis before you make the
Yeah.
election because everyone's salary is going to be a little bit different. You want
Mm-hmm.
to know what that reasonable number is for you. Make sure
Yeah.
that you've got enough gap between profit and your
Well, I
salary to
for many
profit.
years would hear people say once you're at about 100K gross, once you're, and I was much higher than that before my CPA told me it was a good idea. So again, I didn't get a ton of second opinions and stuff, but it is a wide range. And I know a lot of other people who went S Corp when they were at like 70,000 gross. So it's so interesting. It depends on, I guess, your expenses, where you live, all of those details. Yeah.
For sure. I know California is a good example of this because there are certain laws about like forming an LLC, and
Mm-hmm.
I won't go into it, but like sometimes you might do it a little bit earlier in California
Okay.
for some of
Interesting.
those reasons.
Yeah.
And I'll just say, in general, in the accounting industry where they just serve everyone, the
Mm-hmm.
general rule of thumb is you want to have at least $100,000 of profit before an
Okay.
S corp. So that's what like most accountants will tell you that's the breaking
Interesting.
point.
Okay.
But that's because they don't know that
They're
the
not as
average
familiar.
salary in the
Mm-hmm.
United States is like 26 grand a year for
Well,
a beauty
especially for,
professional.
yeah, cosmetologists. Absolutely. Yeah.
Yeah.
Wow. Okay.
So, yeah, and I'll also say like this is where taxes a little bit become a bit of an art where
Yeah,
it's like we want 1 + 1 to equal 2, and yet there's a lot of moving pieces.
totally.
So just, make sure that you're taking into consideration all the things. We have a process when we're determining what reasonable salary is for
Mm-hmm.
someone. And it's like we're looking at the total hours that you're spending every week, both behind the chair and in the business. We're looking
Mm-hmm.
at what are all the different things that you're doing. Are you, an extension artist? Are you maybe like an educator where you're like touring
Mm-hmm.
around and doing more? Like
Lots
if
of
you
nuance. Yeah,
because you're not going to give yourself a $30,000 a year salary when you're like a nationally known
totally.
educator. Like there's right, like there's
Mm-hmm.
nuances for all
Mm-hmm.
these things. So everyone get your own workup is I guess
Yeah.
what I'm saying.
Yeah, but I do think it's important to share because there may be people who have asked, and if it was anything like mine, they were like, oh, you're not there yet, you're not there yet, you're not there yet. That maybe sometimes advocating for yourself or getting another opinion, sometimes the savings could be accurate. And then I know for me, I didn't want to DIY all of that. Like, I didn't want to have to send out my own payroll tax. I didn't want to do all of that. So they also calculated in for us to do this and you to pay us to do this. Here's the income threshold you need to hit for that to make sense. So that was a big piece of it for me as well. Okay, next thing we have on the list is money management and paying yourself. So I guess, do we go straight off of that? Because I have been, paying myself a salary for a long time. I'm sure you have been doing something similar. But let's go way, way, way back because prior to myself giving myself a set salary, I would pay myself kind of a commission. Before that, I had things intermixed. So let's just kind of break all of that down and what your recommendations are from the basic stage to maybe the next couple more sophisticated evolutions.
Yeah, absolutely. So, one thing we didn't say with the S corp is that typically when you're paying yourself, people get scared when I say like your salary is going to be $30,000 a year, and they're like, "How will I pay my
Uh huh.
mortgage? Like, what's going on?" And I'm like, "Okay, hold on. That's not the only income you
Yeah.
have. You will also take distributions. So you get
Mm-hmm.
paid in two ways, not just one."
Yeah.
But what I'll say is when you first start out as a business owner, you're probably only going to take distributions because you
Mm-hmm.
aren't going to have that S corp yet. You're not going to have payroll. Everything will be a distribution. And early on in business, you kind of get beholden to how much can my business afford
Mm-hmm.
to pay me.
Mm-hmm.
And, you got to make sure you're covering rent and all the other expenses.
What's
And then
left
you kind of
over? Yeah.
check and see what's left over,
Yeah.
set aside for taxes, and then see what works. As you start maturing in business, you will get to a point where there's going to be enough to cover your salary, there's
Mm-hmm.
going to be enough to cover, distributions, and then there might even be more thereafter.
Mm-hmm.
Let me just say this. I have met people who are in the top like 1%
Mm-hmm.
in terms of like what they're making in a year, sit down on a call with me and be in tears about how poor they are.
Mm. Yeah.
And I just have to say that, we always think it's going to be once we get to a certain number, everything's going to be fine.
So true.
And yet, like, that's not always the case. And
Yeah.
so much of it comes down to understanding what you're wanting out of life, what things are the most important to you.
Yeah.
And then you hopefully get to a point in your business where your business can cover your salary and distributions and a comfortable lifestyle for you. But then hopefully there's more beyond that because
Mm-hmm.
that's what you take to build wealth.
Mm.
That's what you take to either invest in the stock market or index funds, or maybe you put it back into the business to grow the
Totally.
business and the business gets bigger.
Mm-hmm.
So I think it's a bit of a misnomer sometimes where people think, oh, their business is so big, they must be paying themselves so much. Like, not always. In fact,
Totally.
a lot of really smart business owners actually don't allow their lifestyle to get huge.
Yeah.
They kind of figure out what's important to them and keep that locked in, and then they let the extra work for them.
Yeah. And I feel like that's just a very on offense versus defense tipping point. And I think it's very true when you say a lot of people think it's a number that they hit when that threshold happens, but it's really just like a behavior shift and a management. So, of course, the number matters a little bit, but I'm sure there is probably somebody at a much smaller number who has these things sorted out and their money's working for them versus somebody who the money's flowing in, but they just don't really know where it's going or what they're doing with it. And it's going out just as fast as it's coming in. And then the top line dollar doesn't change that. But I think so many people do think as soon as I hit six figures, then it's not going to feel like this anymore. And I agree. I've seen that time and time again where that's just not the case. My father-in-law has said this quote that I think it's funny and it sums it up. I never thought I'd be making what I'm scraping by on now. And that's just so real. And lifestyle creeps comes up. And I think what you're saying is to really take a step back and manage all of this properly and thoughtfully and intentionally. That's kind of how you escape that feeling, for sure. Yeah. Yeah. I think that's incredible. Those are all kind of the things that I really wanted to go over. I have just loved picking your brain. I feel like you are a wealth of knowledge. Like I told you, when you are not in the room, the way people speak of you is so highly. Every single person that knows you, that I know, speaks so highly of you, Michelle. I think you're doing something so special and different in this industry. And I know that you are helping so many people. So could you break down a little bit what all your offers are? I know you said you have a little bit of education. We talked a little bit about that. I know you have done for you services. Can you break down, if somebody wants to learn more about you and working with you, what are their options there?
Yeah, absolutely. Well, first, thank you so much. It's always like the highest compliment when you're not in the room and people are saying
Oh,
kind
that's how you know that someone's a good person. I'm telling you that. I mean, people, anybody that I know that knows you well, that I speak to, just sings your praises. So I'm like, that's how you know she's a real good one. So yeah, that's great.
That's so awesome. So yeah, as far as our services go, so we try to kind of like meet people where they're at on their journey.
Yeah,
So we have like our base packages that start out with, you know, all the stuff the government wants from you.
totally.
So taxes, bookkeeping, sales tax, that kind of stuff. But then our base package will also start off with tax strategy
Hmm.
along with that. And that's why we typically work with salon owners or even independents who have revenue of at least $100,000, because that's kind of the point where we have that tipping point where an S corp starts to make sense,
Totally.
more of that tax strategy piece starts to,
Work. Yeah.
yeah, all the numbers start working. And then from there, we have packages that just grow depending on needs. So, we have seven-figure salons that not only have all of those pieces, but then also have a dedicated CFO where they're meeting with at least monthly and going over like cash flow and employee productivity and
Yeah.
looking at like pricing and commission structures and just all of the moving pieces that come in
Totally.
the business. And, you know, if you're a true entrepreneur, you have a new idea every minute. And then,
Definitely the people listening to this podcast, that's the case.
yeah, I'm subject to that as well. Being able to take all of those ideas and filter out the ones that, you are real serious about, bringing those to your CFO and then saying, what do these look like financially? And then modeling that out. And it's so revelatory because you can like have a 1 hour call and then be like, I was about to go chase something for the next
Mm,
6 or 12 months
yeah,
that actually, even in the best of scenarios, wasn't gonna give me what I was looking
totally.
for.
Yeah.
And so even if the answer is no, like sometimes that's a blessing all on its
Yeah.
own.
Yeah.
Yeah.
That's fantastic. And then tell us a little bit about your course as well.
So yeah, so we have beauty bookkeeping, which is a really good jumping point for people who maybe aren't ready for those one-on-one
Yeah,
services, but you still want to be organized. You don't want to like be floundering when it's tax time and your accountant's
totally.
like, give me all the numbers, and you're like, I don't know what I
Yeah.
need. So that's what that course is for. It helps you know how much you can pay yourself, because we were talking about, at first you're going to just look and see how much the profit of the business is.
Yep.
So it helps you get all those numbers organized so you know what to pay yourself, what to set aside for taxes, and kind of so you can manage things until you're at the point where you're ready to hand it off.
Love it. Amazing. Well, I will link all of that in the show notes. Thank you again, Michelle, for coming on. It was absolutely incredible. I'm grateful to have connected deeper with you last month. And anybody who wants to work with Michelle and her team, like I said, all the information will be in the show notes. So thank you again, Michelle, for coming on. Thank you guys so much for listening. And I will talk to you all next week. Bye.